And good afternoon. Welcome to Traders Workshop for Tuesday, May 31st. I'm Tom Schneider with NinjaTrader. And before we get on to our new exciting guest, we're going to take care of a bit of housekeeping. I just want to remind everybody that futures and options trading contains substantial risk, is not for every trader. As a trader, you could lose potentially all or even more of your initial investment. So we want to be careful. What do we want to risk? We want to risk what we call risk capital. And that is capital that we can afford to lose, that doesn't change our lifestyle, that doesn't induce stress. I just want to remind everyone that past performance is not indicative of future results, and that what we're doing here today is for entertainment purposes only, shouldn't be taken as trading advice. And so with that, and I'm really excited about our guest today. We have Daniel Sinnig from tradingindicators.com. And I'd like to welcome you, Daniel. Thanks for coming on.
Hey guys. Hey, Tom. How's it going?
It's going very well. How are you doing? How was your weekend? 3-day weekend?
Yeah, a 2-day weekend for us up here in Canada. But yeah, no, awesome weekend. We did have amazing weather. It got worse today.
Okay.
It's a bit cold, but yeah, the weekend was amazing. I was able to get out. I played a couple of soccer games with my buddies. Got a bit of a tan, maybe.
Excellent.
Yeah, no, it was super fun.
And so, when I talked to you last week, you were in Europe, and now you say up here. You know where I am. Where is up here? If you could just explain to everybody where you're located.
Yeah, we are based out of Montreal in Eastern Canada, and just perhaps an hour flight north of New York, east of Toronto. And yeah, it's my second home, or my new first home, so to say. I was born and raised in Germany, and I went through my studies there, but then came to Canada somewhat coincidentally because of a girl back then. Wow. Yeah, that's now 20 years ago. And so I relocated, just be by myself. My family all is still in Germany. And this is also why I am there probably 4 or 5 times a year, just to see what's up with the folks. So my travel, basically my vacationing, is either Germany or here. So I go back and forth quite a bit.
Oh, that's great. And you picked probably one of the most European cities, I would say, in the North America, right? I mean, you could go up to Quebec City, but Montreal is certainly very much a European city in North America.
Yeah, exactly. It's actually a French-speaking city, so which was not easy for me in the beginning, because I did not learn any French in school. My first foreign language, of course, my first language is German, but my first foreign language was not English. It was, back in the day, it was Russian, because I grew up in East Germany.
Sure.
Yeah, back then. So we all had to learn Russian, but not much is left from that. I know this because I went to Moscow, I don't know when, 3 years ago, for the World Cup, or maybe 4 years ago already. And I tried my Russian, and it was horrible. So I did not, almost nothing was left. So except for reading a couple of signs. So yeah.
Well, if English is your third language, it's spot on, really good.
Thank you. Yeah. So yeah, so I'm Montreal. It's been 20 years, and it's kind of a funny story, because had you asked me 20 years ago, where do you see yourself, I probably would not have given you this picture here, that I would be giving the NT8 streaming show Traders Workshop out of an office in Montreal. So this all came together somewhat coincidentally. My background actually is in software engineering. And for the longest time of my career, the objective was to become a professor at the university. And I followed all the paths towards that objective. I did my master's here, my grad school. I did a PhD, a postdoc. I taught many software engineering courses in Montreal, but also in Germany. Actually, I've taught, now that I think of it, courses in 3 different languages, French, German, and English.
Wow.
So yeah, and I do have a radio professor profile. You guys are interested to see how my students did evaluate me. it's not so bad for the most part. And yeah, so that was my objective, to become a researcher. And also my business partner today, Homa, she's watching this show as well. I met her also almost 20 years ago in our university research lab doing our master's. And so my business partner, our relationship dates back that long, but the objective was originally to do something in business together, but it was not trading at the time.
So your background is in software engineering.
Yeah.
And you were going down the academic path, and you met Homa. You have a business partner. What brought you to trading? If you didn't have this career path starting out when you were starting your education, you just knew software. But software is such a huge thing, right? You could apply software engineering pretty much to anything, right? So what brought you to trading?
Yeah, it was. It started out as a hobby, my hobby, back in the day, more than 10 years ago. I was fascinated by the idea of trading, of reading the markets, trading various symbols. And of course, when I started out, I made all the mistakes that everyone else does. I guess when they start out, I overtraded. I took too much risk. I revenge traded. I was very stubborn in my approach. This symbol has got to turn around. And so I donated quite a fair share to the market back then. And I realized, well, trading is not easy and I need help. And for me, as a software engineer, help meant I need better trading tools that help me make better trading decisions. So I rolled up my sleeves and I started programming. And in the beginning, all the tools, all the indicators I wrote, they were only for me, to help me in my trading. And this is also how our story, how the story behind tradingindicators.com started. Most of the tools that are on our online store, they were written originally to help us trade better. And then only we thought, okay, if they help us, perhaps they will also help others make better trading decisions. And we put them on the store. And of course, then we improved further on these tools. We got a lot of feedback from users. Hey, why don't you try to integrate this? Why don't you try this? And many of our indicators are now in version 5, 6, or 7, mainly based or driven by feedback by our users.
Well, so that's really interesting. Just let's go back 20 years, right? So you start trading, and what were you trading? Were you trading futures out of the box, or were you trading Canadian stocks? What were you trading to get you into it and realize you needed to change your approach and start using these tools?
I was trading futures exclusively back then. Not with Ninja at the time. I was with TradeStation, but nonetheless, it was the futures route. And they started off with trading the S&P E-minis. Back then, there were no micro futures. So it was the E-minis, the NASDAQ E-minis, and also various currency futures. Of course, back in the day, and E-minis being quite expensive, especially if you have a relatively small trading account, you take too much risk no matter what, because the contracts are just too expensive. So I learned that the hard way. And then I took a step back. I needed a way to make smaller trades, take less risks, and with that be more sustainable in my approach.
So now, just thinking right now, we have many more products that you can trade, right? Including the micros. Do you think that, and it's hard to say this with the experience you've had in your path, but do you think that would have changed your approach to programming what you're programming, the indicators or the tools that you programmed? Had you had those smaller products, would you have come to the same path?
That's a good question. I think I would not have blown out my account. That's pretty sure, because I would have many more options to scale into a position to take much less risk. Because if you're trading the minis and your account is not just, it doesn't have a certain size, you can only trade 1 or 2 contracts, but chances are there's nothing in between. So you can't really scale, you can't really manage your risk properly. And I learned the hard way that managing the risk is the key to everything in trading. You need to be aware of what your risk is, scaling in, when to perhaps mitigate it, hedge against it, and so forth. But this is only possible if you have the flexibility in terms of position sizing, which you did not have back in the day. But now with the micros, of course, retail traders have a whole new universe of symbols available with proper scalability and risk management.
Right, right. So we'll come back to risk management because I think that is something that's I wouldn't undersold, or it's not as focused on when you're a new trader, right? You're a new trader and you're not focused on I think most people are focused on the market, right? They're focused on what is the market telling me. If they're not thinking like that, they are in a way that, what are the signals? Some people say signals. What are the indications? But when you were looking at the market and you started trading, and you said, I need to up my game. I need to find some tools that'll help me. Where did you look? Did you have a certain set that most people looked at? Did you do online research? Did you have somebody who was at the university who had experience and said, you should look at XYZ books? And if that is the case in one of those cases, what books would you recommend to a new trader who needs help with this in this area?
So for me, and I think my path is perhaps a bit different from most retail traders. I got to learn very early on that I am very emotional when it comes to trading, which is not a good thing. So you want to keep your head cool. You want to stick to your trading plan and don't let your emotions drive your trading plan or your original trading plan. So I learned this the hard way. I was, oh my goodness, I lost this one. Now I have to add more risk to it to make up for that loss, or whatever. All these mistakes which come in when emotions are dominating your acting. So what I did to help me with that is I came down the path of automated trading, fully automated trading. So I wrote actually my trading robots, my trading strategies, which would trade 100% automatic for me. So I wrote them. I back tested them extensively to come up with a strategy which has an edge in the market, or at least for the current market conditions. And I was aware of curve fitting already back then because of my mathematical background. So I not only back tested, but also forward tested my strategies to ensure that they were not curve fitted to historical data, which is a big problem.
Daniel, can we just expound on that? Because my experience with back testing, I know curve fitting, but can you explain curve fitting to somebody who might not understand or have experienced back testing, and what the pitfalls or what the trap is with curve fitting?
Yeah, so every strategy typically comes with a bunch of parameters. For example, maybe an ATR period, an MA period, and other parameters. And of course, when you change these parameters, the strategy will trade differently. Now, back testing and optimization is all about finding the perfect parameters for your strategy. But you have to be very careful that when you do this, when you find these perfect parameters, that they are not only perfect for your historical data on which you have back tested, but they're also, I would not say perfect, but good and in quotes, promising moving forward into the future. Because often it is the case that when you find the perfect parameters for the past, this is probably because something special happened in the past, maybe a big economic event happened, maybe a COVID crisis, who knows? But these things are not likely to repeat themselves into the future. At the minimum, not exactly how they occurred in the past. So you need to make sure that the parameters that you choose, they have, a bit of leeway so that they are not dependent on having the same events reoccurring in the future. And this is what forward testing is all about. So you can kind of rule these the curve fitting out, or at least mitigate the risk of having a curve fitted strategy, which is unlikely to perform the same as it in going into the future.
Right, and you might look at it as if if there isn't an anomaly in the markets, if there's a big move due to some event that might not repeat, right, or we don't know when it'll repeat, and your results are based, a lot of your profit is based on those results, then you almost want to throw that out or look at different time frames. And I think that's what you explained, right? It's the history and the forward testing, making sure that those parameters do perform as somewhat expected, or like you said, good going forward, right?
Yeah.
So,
and what I also do when I look at my historical trade results, I make sure, and this is one of the first thing I double check, is that where do my profits come from? Is it from one big trade, a monster trade, or is it consistently over time through multiple trades? If it's through multiple trades, that to me is already a good sign that seeing that this is not curve fitted, because I build up my profit over multiple instances, multiple trades systematically. If my profits were made up just by one monster trade, maybe through like a massive economic event, that's a big warning sign. I do not want to see that in my historical results.
So getting back to bringing you from university to full-fledged trader and then businessman, right?
Yeah.
You wear a lot of hats. When did you find that trading indicators was where you want to focus your time rather than necessarily trading all the time?
Yeah, it's so even before trading indicators, I was not a full-time trader. I did it on the side, just probably like most retail traders out there. I had a regular job. So I left university. It turned out becoming a professor is not as straightforward as it sounds, especially when you want to stay in the same city that you're living in. If you have flexibility and are willing to relocate, which I was not, then it's easier. But I was always happy in Montreal and I wanted to stay here. And then it didn't turn out. So I went to industry. I worked for a big bank in Canada, and then I switched and I worked for Morgan Stanley for about 3 years, but primarily in the back office. So not trading, doing other IT functions at Morgan Stanley, but I was trading on the side. But when you have a regular job, it's really 9 to 5 or maybe a bit longer. But it's every day is the same. And I was dreading Sundays. Oh my God, the new week is starting. I have to go back to work. I really did not want to have this feeling anymore. So I used my experience in industry, my knowledge in software engineering to start my own company, because I really wanted to have that freedom to do what I want to do and when I want to do it, and to some extent also from where I want to do it. So I told you, my family's all in Europe, so I wanted to have the option to go to Europe whenever I want to. And this is not possible if you have a regular job, right? So these were all compelling factors to start tradingindicators.com together with my business partner, Homa, who had similar motivations.
Oh, that's great. Well, you know what? We've talked about it. We're kind of talking around it. Can we just jump right in and see what you have to show us?
Yeah, let's do it. Okay. So why don't I just pull up a chart? Oh, there we go. Right. Okay, so, I believe firmly that trading should not be too complicated. And a lot of things in trading actually can be done with common sense and just a clear eye. So what I do, and I really prefer, is to just open up a blank chart. So this is a chart here of the S&P E-minis. That's a 50-minute chart. So this is probably the time frame I'm most interested in when it comes to trading futures. It's a personal preference, but the trades typically tend to have the right duration for my taste. But before I even look at this chart, I will switch the time frame and go to the daily level. So I'm going to go here to the daily chart, and I'm going to zoom out a little bit just to see what has happened over the last years with that symbol. And again, this is the S&P 500 futures contract. And what I do now is I look at things, so I can see, well, of course, the market had been going up for quite some time up until the beginning of this year, and then it dropped quite a bit. So what I do next is, and again, this helps me to understand what the current market conditions are. Start drawing support and resistance zones along these big pivot points. And pivot points to me or swing points is where market direction changes. Like here, it went up and then it went down. It's a big swing point. This is a big swing point. They have swing points also to the downside, for example, here. So what I do, I go to my drawing tools and I'll pick the region highlight. And just, where these swing points are, it doesn't have to be perfect. This is not an academic exercise. Just, use your common sense, just draw these regions. That's really simple. So I typically start at the outer ones, just like this. All right. And there are a few more. So let's go here. So of course, here we also had big swing point. And you can see also here there was a support line here. So perhaps another region could be down here. And this is mainly just for me to understand where are the support and resistance zones for this symbol. And of course, they're a bit different for every symbol out there. So pretty much like this. So I'm not going to go into more detail. And I draw this on the daily time frame because it just gives me the overall picture of the market. And I will use these zones later on in my decision making. And if you even want to expand this a bit further, you could also draw some trend channels in here just to understand where price came from and where are we currently in an uptrend or in a downtrend, for example. So let me just go to my trend channel. There we go. So here, of course, in the past, we did have a strong uptrend, which is eventually, as you can see here, was then broken. So the trend channel was broken to the downside. And since then, we are in somewhat of a downwards trend. So let me perhaps also draw this one in. So trend channel. And again, it doesn't have to be completely super accurate. It's mainly just for me to understand what is going on in the market. So yeah, something like this perhaps. Okay, so that's all I do at the daily chart. It typically takes me less than 2 minutes to do this. I just explained a bit more, but it's a really fast exercise and it is super simple. So support and resistance zone just at the big swing points. And if you can see clear trends, like a clear uptrend, you may draw a trend channel. If you do not see a clear trend, then I would not even bother drawing these green channels. Okay, so now this is done. This is on the macro time frame. Then I'm going to go down again back to my lower time frame. And the cool thing in Ninja is that these drawings, they are preserved. Yeah, as you can see now on the chart where these zones were. And for example, this will allow me to see that currently we are in support or in a resistance zone. So you can see here, right? So which is interesting. So we're right in the middle. And to the top of it, we do have our trend channel or downwards facing trend channel. And as you may know, these zones, depending on where price are, they may act as resistance if they're to the upside. We want to trade long. These could be resistance areas, or to the downside, they could be support areas. And on support areas, and you can see this actually quite nicely here, price tends to bounce off from. That's actually quite nicely here. And this helps me in my decision making. For example, how is that? If I would get perhaps a short signal, I'm going to talk about indicators in just a second, in this region here to go short, I should be aware of the fact that, wow, we are right in a support zone where price may bounce off from. This is typically also a warning sign to me, at least to put a grain of salt onto this trading signal, because I may not want to take it because price, again, might bounce off from it. And in trading, at least to me, it is all about, stacking the odds in your favor. So why would I take a short trade here if price is likely to bounce off? I don't think that makes any sense. So why not do the opposite? If I get perhaps a long signal here, and we are, let's say, already past the support zone, and we have a lot of free room to the upside, more than 100 points, which is way more than what I need for my relatively short time frame. I would be inclined, a long signal here would make much more sense to me because there's so much room to the upside. I'm not trading into resistance. It's really far up. There's a lot of room. So this is, to me, a big decision-making criteria. All right. So far, everything has been done completely manual, no indicators yet. But I do believe in indicators. And of course, we are tradingindicators.com. So we do believe in indicators. So what I do next is I'm going to use one of these standard built-in indicators in Ninja, which is called the Stochastic. again, this again helps me to find out what are the current market conditions. So let me just quickly put this on. And I use the stochastics in its default settings. So let me just go down here, stochastics. All right, default settings. I apply it, and the stochastic is drawn down here. And the main reason why I put the stochastics on is to see if we are currently either overbought or oversold, or overbought or oversold. So if we are, let's say, oversold, I may take a sell signal again with a grain of salt, because we're already oversold. Chances are that price may bounce off. Same for overbought. If we are overbought and we're close to it and we do get a buy signal, again, this might be a warning sign to me, perhaps to not follow this signal. Okay, now, and again, this is just a regular indicator applied with its standard settings. Now, so far so good. And this is really just to understand what are the current market conditions. So right now I would say we are in a downtrend. You can see the sloping down channel here. We are almost overbought, yeah, and we are in a support or resistance zones for the symbol. So these are the takeaways from the analysis I've just done here. Now, what do I do next? So now I will apply an indicator which actually gives me buy or sell signals to the chart. Because to me, you know, I follow these signals because to me they're very good recommendations. But the final decision of whether I follow the signal or not is up to me. And I use all the information, which is just pointed out where we are, to form my decision, whether I want to follow this decision, that is the signal or not. So the indicator I will use now, it's a very popular one. It exists for all major platforms. It's called Supertrend. I don't know if you know it. It's a great trend following indicator, and it gives you great buy and sell signals. So let me go ahead and apply this indicator. All right, so I'm going to go here. Where is it? Come on, it's a bit slow. There we go. Okay, so I'm going to apply Supertrend to it, which is down here. Perfect. I'm going to use its default settings for Supertrend and its classic mode. And I'm just going to switch this one off, and give me just 1 second because I want to show you something as well. So perfect. Okay, so I'm going to apply this, and now the indicator is loading to the chart. And as you can, what you can see here are these big triangles. Blue triangles are for buy entries, and white ones are for sell entries. And the way this indicator works is it's an always in the market indicator. That means you're either long until you eventually get stopped out. And once you're stopped out, you go short. And you alternate your position over and over again with this indicator. Now, the standard version of Supertrend works great. It's an awesome indicator. I really like the signals which it provides. But Supertrend, and pretty much every other indicator as well, has one major shortcoming. Which parameters should I use for this indicator? Because also Supertrend has some parameters. And how do I know whether the parameters chosen are any good? And we have, this was always a major problem for me. And we are trading indicators. We have worked very hard on a solution to this problem. And for example, what we've done is we have added this little statistics box on top of the chart. It's automatically displayed, and it will show you, historically speaking, basically by performing a back test, how many trades were taken, what was the profit factor of these trades, and what was the average trade duration for these signals. So basically, what we do is we perform an on-chart back test for the user with the objective to help the user make a better decision about whether to follow the signal that he sees or not, and whether the user perhaps should use a different parameterization for Supertrend. So this is the statistics box up here. But
Daniel,
yes.
before we go on, I just want to touch on a couple of points that you made, which were really, I think, interesting when you're talking about an indicator and looking at how the indicator performed or would have performed based on the data, right? So you're not actually trading this. This is data that you're interpreting based on your parameters, right? One thing you mentioned was, you get an indicator, and it's true of every indicator. The parameters that define the indicator might not be the best for the market you're looking at, right? So if I'm looking, you're looking at E-minis, right? And that's highest volume generally, contract that's traded. But I might be looking at something in energy, or I might be looking at currency futures. Yeah. So they have different dynamics. The parameters would be different. If I were to switch over to a different currency, would this indicator have the same parameters, or would it adapt to that data? I'm trying to kind of get it straight in my mind based on what you said.
That's a great point. So the traditional super trend would require for the trader to set his own parameters. So the trader needs to define what is, in case of super trend, what is the ATR period and what is the ATR multiplier. So these are the two standard parameters of super trend. You can see it here. So if I select super trend, you can see there are two parameters, the multiplier and the ATR period. But whether to choose 3 or 7, or perhaps different values, this is up to the trader in the original version of Supertrend. But it is not often very easy to see which values the trader should choose. And this is why we have actually, in addition to this statistics box here, added in another important feature to this version of Supertrend, which is the optimization feature. Once I select this box here, which is called Optimize, and I click OK, and watch these parameters here. It's 3 and 7 because I chose them manually. But now I enable optimization. So I will click on it, and the indicator will now try out all different combinations of these parameter values to find the best settings, historically speaking. As you can see here, as it turns out, the best settings for the E-minis on the 15-minute time frame is a multiplier of 3 and an ATR period of 20. And this would give you 18 trades with a profit factor of 3.67. Of course, historically speaking, this is a back test.
So just to be clear, we want to define what ATR, for those of you who don't know, ATR is an average true range. So it's not the actual high, low and averaging it up, but there's the true range includes the previous day's close if there's a gap, but it's a measure of volatility. So I just want to make sure that everybody understands when we talk about ATR, we're talking about how volatile this, what the volatility is for this market. And we look at a different average range. It sounds like the 20 is a 20 period, right? Look back for that average true range study.
Exactly. And the way this is being used in Supertrend, for example, it determines how far my stop loss, this white line is my stop loss, is how far it is away from the current price. The more volatile the market, the more space you want to give your stop loss, because you don't want to be, stopped out in the whipsaw move because it's very volatile. So if I increase the multiplier from 3 to 5, you would see that the stop loss line is much further down, meaning you give your trade much more room, which can be good, but also could be bad because you may lose more when you get stopped out because you give so much room for your stop loss. But again, the question is, what are the ideal settings? And with trading indicators, we have worked on the solution where we will tell you, where the indicator will determine automatically what are, historically speaking, the best settings for this particular symbol and the time frame. So in this case, it will be 3 and 20. Yeah.
And Daniel, how far back is that looking? I know 15-minute data. We're looking at what, something like 100 bars or a little less than 100 bars in a day.
It's a parameter that the user can define in the backtest settings. Right now, by default, it is 1,000 bars. And if you scroll back, you can actually see when this period started, because Supertrend will only start coloring the lines from this point on. This is when the backtest started, basically. So we have quite a few symbols in here. We have 18 trades, and I I think it gives you a good idea. But if you want to consider more bars, maybe 10,000 bars, the user has the option to do that as well. So it's really up to the user. I do not think that, personally at least, for a backtest, especially for the lower timeframes, taking into account too many bars is a good thing, because market conditions do change quickly, especially on the lower timeframes. And what happened 2 weeks ago in terms of how the market behaved might be completely different today. And considering these trades in your backtest may not be beneficial.
And that kind of goes back to what you were saying about market conditions, right? Overall, which is the market will behave differently in an uptrend than a downtrend and the sideways trend, right? So will the indicators. And if you look at 5 days or 10 days historically now and say, oh, I like these parameters, I'm going to keep them. Yeah. Having the ability to adapt the parameters to the most recent trend is really interesting, I think. And it was quick. I'm amazed at how quick that was to come back with those results.
Yeah, it takes seconds. And actually, NinjaTrader is such a powerful platform. We even push the limits. And maybe I can show this real quick now, one step further, because we're only looking at one symbol on one time frame right now. But NinjaTrader actually has a very powerful scanner. It's called the Market Analyzer built in, which allows you to scan. These are all the futures contracts that Ninja supports, micros and minis. Allows you to scan for buy and sell signals across all the different future symbols and on different time frames. So there's no, we can see there's a buy signal, for example, on this futures contract, M6. You can see it here, buy on this one as well. And in addition to this, you also see on the right-hand side the profit factor. So historically speaking, again, based on the back test, what was the profitability of that back test? And to me, as a trader, I take confidence from that, because I would follow a buy signal more likely when the profit factor is higher. And as a general rule of thumb, a profit factor above 1 indicates a profitable trading system, at least historically speaking. Below 1, it would be not profitable. The higher the profit factor, the better it is. So here, a profit factor of 2.79 could be a very, it's quite promising, at least historically speaking, so to say.
So it sounds like, Daniel, I mean, with the profit factor here, what's really interesting about that is it kind of goes counter to what you were experiencing as an early trader, right? As your initial, you were revenge trading, you were trying to, your risk management was non-existent, let's just say that, or minimal, right? Yeah. And you were very emotional. Here, it's the opposite, right? You can just look at the numbers and say, I kind of know what I'm going to, the risk reward, I kind of know what it is, right? With that profit factor.
Yeah. So the profit factor in general is just, how many winners I had versus losers in my back test period. But when it comes to risk management, this is a really important point, is I know with Superton right away, let's look at this symbol, this entry signal right here. It's here. I know exactly where my stop loss level is. It will be at this level here, at least initially. So I can measure this distance. Perhaps it's 25 points, which is quite a bit. But if I trade the micros, for example, I can now choose a position size, which is consistent with my risk tolerance. So I do not lose too much money. I do not lose more than X% of my balance should I get stopped out. And this is for the worst case. So it is so important to choose or to do proper position sizing and consistent position sizing. For example, never risk more than 2% of your balance or your equity. And do not alter from that rule, because if you would alter, perhaps you would revenge trade, perhaps you would try to make up for a previous loser by risking more, but this almost always is a recipe for disaster. So right now I'm very strict when it comes to my trading rules and my position sizing. I follow my own rule set to the dot, and I can do this because I know when I enter the trade, where's my stop loss level? And since I know where my stop loss level is, I know how much I could lose at the most when I get stopped out. And then I would choose my position size accordingly.
Yeah, that's interesting. You're looking at E-minis. Can we take a look at another market that you trade, or that you would look at?
Yeah.
In another, yeah.
Yeah, I'm just going to open up this chart here. Again, this is, again, the E-minis on the 5-minute chart this time. But perhaps let me choose the NASDAQ futures. And here I've applied a different indicator of ours, which is called the Volatility Crusher, which draws these little rectangles here. It also has buy and sell signals. And the really cool thing about this indicator is that we have implemented a unique feature. You do get your statistics just like a super trend, but we have also integrated into this indicator a little widget, which allows you to modify your parameters on the fly. So you don't have to go to the settings in NinjaTrader and to the indicator parameters. You actually can just slide things around here. And as I do this, look, everything updates in real time on your chart, including your success statistics, historically speaking, up here. And this is a super powerful feature because you can find manually the right settings very quickly. So this is not auto optimization. You would optimize manually by playing around with these sliders. But often, many traders like this because they don't trust the auto optimization. They don't want to understand why a certain set of parameters have been chosen. And using this manual approach with the sliders can be very quick, and you come to similar conclusions as of auto optimization. But at least in this case, you also know why you ended up with these parameters, because having a rationale as a trader and knowing why I entered into a trade is very important. Because if you have a reason why you entered into a trade originally, then you can do a retrospective afterwards. If it was a winner, good, perhaps I should follow along that path. If it didn't work out, perhaps revisit these rules, let's revisit the conditions, why I entered into this trade. Perhaps I want to alter something.
That's really neat, and I think it reflects your experience in university, right? Which is taking the data that we take for granted, right? Charts, indicators, and making the display easier to use, or you can, using your data visualization experience, create something that is the reaction to what your inputs are seen reflected immediately. And you can, we're all visual, right? I think if we're using NinjaTrader, we're definitely visual traders to some extent. And this is a really slick interface. I think it's great. I think that's amazing. And, we're not really going into the tools that are part of this. It looks similar to Super Trend a little bit. You mentioned its volatility. So all of that is interesting, but I think what's really neat here is the ability to, kind of play with the numbers and see how they would react right away.
Yeah, exactly. So we believe tools should help you trade and make trading easier for you. It should not overwhelm you. That's what constantly thinking, how can we improve a visualization of an indicator even further? So here, for example, this is our divergence indicator. We have these glowing clouds, much of it can be seen properly, behind the price graph, which shows you whether we have bearish or bullish divergences. And the user can use this, for example, as an additional filter for his own decision making. Perhaps only go long if the cloud is greenish, or only go short if it's reddish. So this could be an additional filter to be used by the user. And we try to use the visualization in a manner that it will not overwhelm the trader. So it's kind of in the background. You can see it, but it doesn't dominate the chart.
Right. That's amazing. Daniel, this has gone way too fast. I think I could spend another hour just looking at just this chart, just this indicator. For the people who are watching, I want to thank you for joining us. And Daniel, if you could just let them know where they could find you going forward.
Yes, absolutely. So so we are tradingindicators.com. We do have a homepage, of course. It's tradingindicators.com. And if you go there, you see a variety of cutting edge products, many of them, or most of them actually, for a NinjaTrader, including the indicators that I've shown today. Every of our indicators have a lot of documentation. We have videos. We do weekly webinars every Thursday showcasing our indicators, showcasing how to build your own automated strategies with NinjaTrader, how to do scannings and all these things which are so important in your trading and can make your life so much easier. And for all of our NinjaTrader products, if you want to try them out, we do offer a 7-day money-back guarantee. no questions asked. So you can try them out risk-free. If for some reason you don't like them, just tell me, hey, Daniel, this indicator was not for me, and you will get your refund, of course. And so this is one of the things we do with NinjaTrader. So we offer this 7-day money back guarantee. So I encourage you, check out our homepage. We have lots of cool stuff out there. We try to be as innovative as possible with our indicators, be it auto optimization, be it some innovative visuals such as a glowing cloud, these sliders that you've seen. So lots of cool stuff. So if you want to check them out, go to our homepage.
Oh, thank you, Daniel. That was great. And I look forward to the next big indicator you guys are creating. I love data visualization. This is right up my alley. So thank you for coming on and speaking about what you're doing at Trading Indicators. And with that, I'm going to say thank you to the folks that joined in. Have a great trading day.